Good morning, guys. It is Tuesday, January 30th, 2024. This is Bathrobe Business. I'm Georgi Oganov. I'm sleepy. I got my coffee, and I got the news. So let's jump into it. I've got a couple different stories to share with you guys. I think today's a pretty exciting news day, simply because we've got tons of earnings, and the Fed meeting has started. Now, we're not going to get any real information today. It'll probably be at the end of the day tomorrow where we find out, is the Fed actually doing anything? Are we going to have rate hikes, rate cuts, etc.? Nothing is actually going to happen tomorrow, but they're going to signal what's going to happen at the next meeting. So it is exciting to see which direction it's going to take. I'm still saying we should have higher interest rates. I am still begging the Fed not to raise interest rates. If you watch my channel, I give you all the reasons of why high rates are better for the economy, are better for the individual consumer than low interest rates. Low interest rates do nothing but help big, massive, mega cap stocks. They do not help Main Street. You want high interest rates, period. But we will see what comes of it tomorrow. So let's jump into the first story. IMF, the International Monetary Fund, is expecting global growth this year to be 3.1%. It's actually raised its outlook on growth this year. It's then saying that in 2025 we'll expect 3.2% growth. It's probably too ambitious to be talking about 2025 when 2024 is just about a month old. But the reason they're citing this is two countries, the United States and China. That's very interesting that they're talking about China. I don't know why they would if we just reported a couple of days ago that China had abysmal GDP growth last year. Remember, the United States, we reported this last week, had 6.4% GDP growth in 2023. China only had about 4% GDP growth. And they are still reeling from a real estate crisis. As yesterday we reported, Evergrande has been forced to liquidate. So I don't think China is going to be the driving force, but there is a secret country that nobody's talking about that probably will help global growth drastically, and that is India. So India is set to be the world's third largest economy by 2027. The finance minister said it's expected India to grow above 7% this year and another 7% in 2025. It is plausible and very believable because India is growing incredibly quickly. Now, I would say that it is also being overestimated because I think India has massive infrastructure issues that nobody really addresses, is a major contributor to what's going to hinder their GDP growth. But at the early onset, I think this is very much possible. It's going to be in the later years, in 2025, 26, 27, where they're going to start feeling headwinds with their lack of infrastructure. It's no secret India has massive issues with infrastructure and has for decades. So I think until they start addressing that, no real growth is going to happen. Hint, hint, maybe the United States should pay attention to that as well. Our infrastructure is shit. The next story is about GM. General Motors beat with massive profits in the fourth quarter. So GM beat Wall Street estimates, forecasting continued strong profit in 2024. So they earned 42.98 billion versus 38.67 billion estimated. So they crushed it by almost $4 billion. Now, the subtle part of this story is their sales in China are down. And this is on par with everything else we're seeing coming out of China. China is really, really struggling. Sales of everything coming out of China are down, whether it's domestic products or international. So China is going to be facing a lot of issues here in 2024, and it'll be interesting to see what direction it takes. They've got real estate crises, they've got growth issues, they've got employment issues. Even though they have a small population now, smaller than it's ever been, their unemployment among youth is actually very high. As a comparison, in the United States, unemployment among youth is at its lowest. Employment among teenagers is the highest it's been in a few decades. It's currently at about 46%. Teenagers' employment rate is about 46%. That's up from pre-COVID numbers. Pre-COVID in 2019, it was around 34%. So more teenagers are having jobs than they had in previous decades. This is actually reversing a trend. So teenage employment rates have actually been dropping for the last 30 to 40 years, and this is the first reversal we've seen in probably 3 or 4 decades. So it's a very positive sign of the economy because teenage employment not only boosts service sector, it also usually increases productivity because those teenagers continue to work heavily throughout their life and raise GDP and productivity as they go. So the fact that Gen Z is being very industrious is very good and very positive for the American economy. The next story I want to talk about is one I kind of mentioned yesterday in passing, and that is global debt. So Nassim Taleb says that we are facing a debt spiral of swelling debt. Who's Nassim Taleb? Well, Nassim Taleb is famous for writing the Black Swan book. For those that don't know, a Black Swan event is an event that cannot be accounted for. It's an event that is so rare that there's no way you could have expected it to happen. It's the 2008 financial crisis. It's COVID. It's 9/11. It's something so drastic there is no way you could have expected it to happen. Well, he is talking about the death spiral of swelling debt. And it is something that Jamie Dimon talked about as well yesterday, and something that's been on my mind for a while, but I haven't really brought up on the channel. So GDP and debt is now at an equivalent rate. That's essentially never happened in U.S. history. And what's crazy is there's no sign that it's going to be slowing. This is more than just a political issue, because it doesn't matter if you're voting Democrat or Republican. The debt is growing. Every administration that comes in, whether it's going to be a Trump administration or a Biden administration in the next cycle here at the end of this year, the debt is going to increase, and we need to do something about it. Because don't forget, every time they raise interest rates, that's also interest raised on the debt. That's how much you individually owe on the U.S. economy. And how this is going to continue is a real question, because even though the U.S. economy can just keep printing money, we've seen that the U.S. economy can't just do what it wants to in face of actual economic crises. Because we used to say, well, inflation doesn't matter because we're a new monetary theory. You can print as much money as you want. Well, that turned out to be untrue, because during COVID, we printed trillions. And let's not forget, pre-COVID, the U.S. budget was about $4 trillion. Post-COVID, it's now $6 trillion. That was supposed to be a temporary measure to raise the U.S. economy during COVID and print stimulus checks, give stimulus to companies, the PPP Act, etc. It was supposed to be temporary measures, but the U.S. budget is now just firmly set at $6 trillion, and it's going to keep growing. And nobody is talking about it. Nobody's addressing it. All you get is Republicans and Democrats talking about we need to spend more and more and more. We need to start doing cuts, because more and more important people are seeing this as an issue, and it's going to be a major issue if anything ever happens. If we default on the debt, there's no telling what's going to happen to the U.S. economy. Last story I'm going to talk about is Microsoft. So this is a story that is pending. Microsoft is set to post earnings after the bell today. I'm actually probably going to buy some Microsoft stock beforehand. I'm going to kind of play the market and see if it pays off, simply because everyone is expecting them to post higher growth because of AI. Now, this is the interesting part. AI is actually incredibly expensive to operate. I think ChatGPT search, we'll call it a search because I don't have a better word for it, costs about 7 to 8 cents in processing power. So it is a massive drain on revenue. However, the increase in productivity is kind of undeterminable at this point. So Microsoft and AI have this unholy alliance that we don't fully understand, but Microsoft is investing heavily in AI themselves, independent of their investment with OpenAI. At this point, I feel like OpenAI is just an extension of Microsoft, but even Microsoft proper still has massive investments in AI, and everyone is expecting them to report massive earnings. We will see what they report, and I would really like to go into those numbers and see exactly the details of where that growth is happening, because I think it's going to tell us which direction AI is truly headed. Everybody always has lofty ideas of AI is going to do this, AI is going to do that, but I think the numbers are truly going to show us what direction AI is taking and where we can expect growth in AI in 2024. That's pretty much it. I'm going to go buy some Microsoft stock. I will see you guys tomorrow morning. I hope you have a productive day. I'll see you tomorrow.